You are watching Market Watch, the brief overview of the key events from the world of finance. On Thursday, the final data on the change in the pace of GDP growth in the United States for the third quarter of 2023 were published. The actual data turned out to be lower than the preliminary estimate, indicating not so confident growth in the world's largest economy. Also on Thursday, the Philadelphia Federal Reserve's Index of Manufacturing Activity was published. The rate of decline in this indicator is ahead of forecast, thereby increasing the likelihood of a recession in the first quarter of 2024. Nevertheless, investors reacted cautiously to this release, pointing to the expectation of a more important fundamental factor. Most likely, the largest investors and traders are waiting for the upcoming report on changes in the Basic Price Index of personal consumption expenditures. In fact, this is inflation, so this release has a high impact on financial markets. An unexpectedly strong decline in the index can weaken the US dollar, providing support for gold and stock indices. After all, a slowdown in inflation will push the Fed to lower the key interest rate, thereby putting pressure on the yield of government bonds of the American government. As you understand, this is a fairly strong bullish fundamental factor for gold and, accordingly, bearish for the US dollar. But in addition to the upcoming publication of an important macroeconomic report from the United States, it is necessary to take into account the approach of the long Christmas weekend. In fact, Friday is already partly a day off. For example, the United Kingdom and New Zealand are already celebrating, and on Monday the whole of Europe and the United States will join them. A prolonged weekend is primarily the risk of opening at a price different from the closing price. This can often be seen in the oil market, the stock market, as well as gold. It is less common to find gaps in key currency pairs. Therefore, if you trade in oil, gold, or the stock market, consider the risk of a gap when holding open positions through the weekend. Shifting to the cryptocurrency market, it is also important to take into account the approach of long weekends and New Year holidays. Therefore, the probability of approval of applications for the creation of a Bitcoin ETF in the past year is unlikely. It is really important to take this into account, because in this case the risk of a corrective decrease increases significantly. At the end of the calendar year, many investors may start taking profits, especially if they believe that the decision of the U.S. Securities and Exchange Commission will not be made this year. Therefore, they will be able to end the year with a good fixed profit and buy the cryptocurrency again at a more favorable price in the event of a correction. And although this strategy carries risks, some traders can use it. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.